I sighed a great sign of relief when there was no change in the capital gains tax, and we were pleasantly surprised by the relaxation given on the personal taxation.
This is our second podcast start, and it's a great day to be podcasting because we're talking about the budget today. Huge event, great budget, and I guess I'll hand over to you. What are your thoughts? How do we process this budget?
Yeah, I think it's a great day to have a podcast, Varun. And I, for one, and markets were very nervous about this budget because the run up to the budget, there were a lot of rumors and discussions that there would be some rationalization of capital gains tax. And by rationalization, they always mean higher taxes. That's the government's way of saying that softening the blow in order to tax you higher. And the key thing is that the last 2 3 years, we've seen a surge of retail inflows. One of the important elements of attracting retail into the stock market was the very friendly tax structure, just 10% for long term, 15% for short term, and only 1 year lock in for long term. And that was a key marketing point for everybody: stockbrokers, investment advisors, money managers. And if there was any tinkering over there, then that would affect retail flows. And retail flows are a good counterbalance to selling which comes from FIIs. So it was important for the health of the capital market that there be no tinkering or any changes on that count. And we had a huge relief. Actually, I sighed a great sign of relief when there was no change in the capital gains tax. And we were pleasantly surprised by the relaxation given on the personal taxation.
I think we'll come to the personal taxation in a second. I was thinking, why don't we structure this like the budget speak? Let's go through the headline figures. Let's talk about their impact, and then we'll go over the highlights and stuff like that. So I guess just to recap, the total budget expenditure is 45 lakh crores. 35 lakh crores is revenue expenditure, and I think that mostly breaks out into pensions, interest payments, state transfers, central sector schemes, defense subsidies. No big surprises there, except for I think the really big number was the surge in capital expenditure. I think 37% up to 10 lakh crores. Bodes well, and it seems like it's a theme with this government. They keep pushing capital expenditure.
This government wants to really build India. We have seen the kind of infrastructure which have been built in the last 7 8 years. It's never been done in independent India ever. And in terms of road construction, airports, ports, power plant, renewable energy, railways, yeah. The way the Modi government has gone after rebuilding and modernizing India is extremely creditworthy. And the dividends of this will come for many decades going ahead. Yeah.
For sure. I think particularly for our millennials, something that I found quite heartening is, a large chunk of this capital expenditure is going towards, environmentally friendly projects, so to speak. Particularly, things like National Green Hydrogen Mission, renewable energy, stuff like that. Because, what this does is as the Indian economy continues to grow, I think reducing the carbon intensity of that growth is going to be important. I think we know we need to hit net zero by 2070. So it's nice to see that we're continuing to invest in renewable energy infrastructure. Because I think if we become a global leader in that space, then it's almost like we've jumped a step in the industrial revolution.
That's right. I think even the private sector is very much focused on ESG. And we are seeing company after company have very specific plans for ensuring that they are net zero. Do you know that Hindustan Zinc, one of India's leading mining company, they're going to spend $1 billion over the next few years to convert their mining equipment from diesel to EV.
Oh, that's interesting.
Yeah. So this is the kind of challenges that companies are taking up, that they want to become more and more environmentally friendly. And EV is the way going forward. And right now, if you look at the way the power grid and the way the power generating capacity is coming up, I suspect that a large portion of it is through wind and solar power, and a huge amount of capacity coming in over there. NTPC, which is one of the most polluting companies, sorry to say, all their expansion plans are now only renewable energy.
Because, we've reached a point with renewable energy where the marginal cost of solar power is lower than the marginal cost of any other form of electricity generation. So, at this point, it's not even a question of the environment. It's a question of pure economic sense.
I think governments recognize that, and budget after budget, they have been giving a lot of encouragement to green energy. And if you notice in the budget, a lot of the customs duty on setting up lithium ion batteries, that has been retained, extended, and otherwise also
Expanded as well, right? Like, I think there was customs exemptions for lithium ion batteries on mobile phones. Now they've expanded it to EVs. Yeah.
So I think small baby steps from the government, but then the whole ecosystem comes into play in that manner.
Yeah, that's good. That's good. Out of curiosity, any companies in particular you think that will benefit from the greening of the Indian economy more than others?
See, I think that all our Indian auto companies, especially Mahindra and Mahindra and Tata Motors, they've got solid EV plans. And at the recent Auto Expo, Maruti also unveiled their strategy for EVs. So one of the biggest beneficiaries of this entire move towards green energy, electrification is going to be the transportation sector. And many companies over there will suddenly get a lot of benefit. It'll be easier to raise money, more conducive tax structure, and of course, a great deal of adoption by the consumer, because all of us are getting aware that we need to be environmentally conscious. There are huge waiting lists for EV vehicles, and new models are coming in all the time. Other companies which come to mind over here is Amar Raja and Exide, traditionally lead acid battery manufacturers, but they are going massively into lithium ion and other EV batteries as well, which can be used for the auto sector and other applications as well. So these two companies also come to mind. But on the whole, I think if you're going to look at buying a stock just based on environmentally friendly move or that entire trend, then there are not so many stocks that we can identify right now.
Yeah.
Because it's still an emerging nascent sector.
A fun fact, you were mentioning how the Indian automakers are well poised to, benefit from the EV wave. Something I didn't realize. So, Formula One, right? Like, yeah.
You see it all the time.
Yeah. Biggest car competition in the world. So, obviously, there's no Indian car manufacturer in Formula One. I think the only major, automobile manufacturers are Mercedes, Ferrari, I think Aston Martin is coming now, and I think Audi is going to be coming in soon. But interestingly, there's Formula E, which is the 100% electric race. Yeah. And both Mahindra and Mahindra and Tata under the Jaguar brand have teams in Formula E.
Oh, that's the first one for us.
Yeah.
We are skipping a whole generation. Didn't do Formula 1, now we're going straight to E. Formula. Yeah.
So they've obviously, and they've been around in Formula E for a number of years. So clearly they've been putting that R&D investment, and
I'll pay them rich dividends going ahead.
100%. That's the hope, right? It's the hope is that India goes and skips that fossil fuel wave of industrial revolution, goes straight to the green industrial revolution.
So in light with that, and we are talking about capital expenditure and government spending. One important encouragement given in this budget is the spending on railways. So it's the government's endeavor to increase more and more transportation through the railways. They have got a massive 50,000 wagons order at 23,000 crore. That tender is in the process, and a lot of capital expenditure is going into railways. Recently, Siemens won a huge order for EV engines. So instead of running on diesel, the engines will run on electricity. There's a great deal of spending on electrifying all the tracks within the country. So what the government is trying to do over here is that use less diesel for transporting everything, goods as well as people, and use more and more railways. And years of neglect on spending on railways is now being corrected. And this budget and the previous one gave a lot of encouragement to railways. And mind you, that benefits a lot of stocks engaged in the railway ecosystem. There's IRFC, which finances the Indian Railways. There is Rail Tech. There is also a private sector company, Titagar Wagons, which makes actually the wagons which go the rolling stock. And there are other companies as well. I think great times for them going ahead. And also traditional engineering companies, be it ABB, Siemens, Larsen and Toubro, they all have got specific products for the railways. And even air conditioning company like Amber Industries, they've got a subsidiary which does air conditioning of passenger bogies.
Yeah.
So that entire ecosystem around railways and additional railway spending, that is going to do very well next 3-4 years or so.
I saw a statistic that really highlights what you're saying. I think from 2014-15, from FY14 to FY23, the capital expenditure on railways has gone up 9-fold.
Wow, I didn't know that.
Yeah, which is unbelievable. And obviously it's going to help all the companies in the transportation sector. But what I find like really heartening in particular is every time you spend money on public transportation, the people that benefit the most are the lower income and the poorest in the country.
Absolutely.
Because it's the cheapest form of transportation, and the better the quality of public transportation, the more people are able to move, and increases opportunity and reduces cost. And so the better the Indian railway infrastructure.
So this is Gati Shakti coming into play. See, the Modi government wants to reduce the cost of logistics by using more railways, improving the port efficiencies, improving the highways. And that entire project is called Gati Shakti. And that's really playing out over here because Indian logistics costs are amongst the highest in the world. And we're trying to correct that over there so as to make our economy and our industry more competitive.
Yeah, I think sort of ties in very well with GST as well, right? Like you have a single taxation system across the country. I think there's a national logistics ONDP, the national logistics platforms coming soon as well, reducing logistics costs. It's just more integration of the Indian economy.
Absolutely. And talking of GST, second highest GST figure for the month of January, 1.56 lakh crores. So I think it's hard to find anything negative in this country, don't you think, Varun? I mean, I hope you're not getting carried forward over here with our bullishness.
We're just fully getting carried away, but it's fine. We're gonna keep getting carried away with it. Let's come back to the figures. Okay. There may be something that's not as great. I think one point to highlight is the fiscal deficit for FY23 was 6.4%. The projected fiscal deficit for FY24 is meant to be 5.9%. And there's an ambition to hit a fiscal deficit of 4.5% by FY26.
That's
any
right.
Thoughts?
No, see, what has happened over the years is, especially post this pandemic, fiscal deficit numbers have gone a bit haywire. When I was 5-10 years ago, when I used to analyze the budgets, we were like, we used to frown at 2.5-3% type of fiscal deficits. But now I think economists, experts, all the gurus, they seem to be fine with these kind of numbers as well. But we need to be careful over here because we have a twin deficit. Fiscal deficit also is, as you said, 5.9%, and we have a trade deficit as well, which keeps pressure on the currency. So these are the two, I would say, structural issues which India needs to address. And mind you, we have addressed many structural issues over the last 7-8 years, and I've spoken about that as well. The kind of retail money acting as a counterforce for FII selling, oil prices, the way the energy pricing has taken place, so there's no direct hit on the balance sheet of the country. And of course, we no longer have coalition governments at the center. I mean, these are the three structural problems which were there with the economy and the stock market. We've solved those. Now, the bigger challenge is to solve these twin deficits. and get them within control and be amongst the best in class
Yeah.
as compared to other
I think the
countries.
plan to get the fiscal deficit under control, particularly, is to hit 4.5% by FY26, which, if you think about it, right, you go from 6.4% to 5.9%, which is 50 bips, and FY24, FY25, FY26. So if you take this rate of change going forward, right, then you assume a 50 bips change in FY25, you're at 5.4%, and you go another 50 bips for FY26, that leaves you at 4.9%. So I don't know how credible
It's
this.
zero point 0.8. The change is going to be 0.8 every year.
0.8. Okay.
So that'll take you to 4.5%. That's what the
That's okay.
finance minister has said. But let's see, governments all over the world make promises on the fiscal deficit fund, on the fiscal front, but they're not able to fulfill it. And there are always some exigencies or something which has come up. But let's see. I'm hopeful this time around because the tax revenues are buoyant. And the government, when it is calculating all these fiscal deficits, has taken a conservative growth in the tax revenues. Varun, in the past, we used to always have very optimistic growth numbers for the tax revenues, which never came through. And then we had so many other expenses which were outside the balance sheet of the country, outside the budget. And therefore, the fiscal deficit figure was always a bit dodgy. But since the Modi government has come into power, the one fantastic thing which they have done for the country's finances is they have consolidated everything in the central budget. There are no off-balance sheet spending. There was never any income off-balance sheet anyway. And they have taken conservative and realistic figures whenever they're making projections. And that's brought a lot of trust and a lot of confidence in what the government is doing about its finances, not only in India, but globally as well.
Mhm.
It's yet to be reflected in better credit rating for our country. But this is something which is amazing, which has happened, that, we have got credible figures to work with for the first time, I think, in decades.
Yeah. It's interesting that you say it hasn't reflected in the credit rating. So I did a little bit of digging, and obviously we know the fiscal deficit is 6.4 and 5.9, and the plan is to hit 4.5%. But the more interesting number, fiscal deficit is important, but to me at least the more interesting number is the primary deficit. And I guess just to outline what that is a little bit further, if you take the net interest expenditure out, the primary deficit effectively represents the amount of money coming in and the amount of money going out, excluding interest expenditure and interest receipts and capital receipts. And against a 5.9% fiscal deficit, our primary deficit is 2.3%, which is, this ratio is pretty normal across most countries. You have a fiscal deficit that's larger than the primary deficit because you have a giant debt stock. But I was digging a little bit deeper, and if we hit a 4.5% fiscal deficit in 2026, we'll have effectively a primary deficit of just 0.5%.
Yeah, that's fantastic.
Yeah, which means we're basically earning and spending the same amount. And even more interesting to me than that is, should we hit that number, we'll have a primary deficit that's better than the US, better than China, and better than most of the euro area, including France.
That's fantastic. It's a very good observation. Let's hope that the finance minister is able to achieve that. And we have, of course, a major election. And hopefully beyond May 2024, we'll have the same team in place so we can hold them to their commitment of a 4.5% fiscal deficit.
Yeah, because I think it would be one hell of an achievement to have a practically zero primary deficit. At that point, you're just paying off your debt, and that'd be a great achievement if we can make it happen.
Enough of macro, I think. Our viewers may get too bogged down by
I love macro more than you love macros, so that's on me. Let's talk about the next big subject, the taxation changes.
Yes.
Right to the micro.
Yes. So I think that intuitively what the government is trying to say over here, and this is a very fundamental change coming in, is that they want to give the freedom to the average Indian how they want to spend and how they want to save. So let me just expand a little bit over here. In the earlier tax regime, there were tax breaks when you invested in public provident fund or a provident fund, you bought an insurance policy, you invested in a savings scheme. So the government was trying to incentivize savings in specific asset classes. Then they introduced this new tax structure where it was a simple tax structure, five slabs, and it kept on increasing. But there was no benefit given for any savings which you were making. But that particular tax structure did not succeed because it was too close to the earlier tax structure, which offered incentives for saving and tax breaks over there. And now they've tweaked that new tax structure from 8 slabs to 5 slabs, and they have increased the exemption, the rebate as it's called, from 5 lakhs to 7 lakhs. And accordingly, also all the tax slabs, the actual rate of taxation has been curtailed in such a way that now I don't think it makes sense for anyone to be under the old tax regime. You'd rather be under the new tax regime. Now, I'm sure when you compare the actual tax outflow from the old tax regime to the new tax regime, there may not be a material difference, but your cash flows are better because earlier a large chunk of your salary or of your income was going into specific savings products. Now you have the choice. You can invest that additional cash flow either into equities, the same traditional asset classes you were investing in earlier, PPF, insurance policies, so on and so forth, real estate, REITs, anything you want. So the government is trying to make you more responsible. It's trying to make you more independent, that you plan your finances whichever way you like it. And I think great deal of relief has been given over there. So it provides a flexibility. Somebody who's young, who's got a great career ahead of them, they may indulge in more spending because that's much more pocket coming in, that much more cash is coming into their wallet because there are no savings, perhaps no savings that they want to compulsorily have to do. And as you grow older, you can decide which asset classes you want to invest in depending upon your risk appetite and comfort levels. So this is a very different form of thinking where the government is trying to empower you, that you take your decisions. And I think that's wonderful. My sense is that companies which are engaged in consumption, which provide services, products for consumption, they will do very well because of this particular move. Companies engaged in financial products, asset management companies, wealth managers, stockbrokers, I think they will also benefit because there is definitely a tilt towards more and more financial products, saving insurance companies as well, but of course they got hit elsewhere. So this is a very different sort of a turn which we are taking when it comes to savings and spending at the household level. And it will not be visible in this year or next year, but in over a 5-10 year period, there'll be huge changes in the way people are spending, where they are saving, and where they are saving. And many opportunities will come over there as well. And many stocks will come. When you take a 3 to 5 year type of view, you will find many stocks and many companies benefiting because of this trend, which is going to get more and more evolve more and more, become stronger and stronger going ahead.
One notable omission from this budget that there's a huge positive, especially in a pre-election year. I think there's been no giant SOPs, no large subsidies, no expansion of the Revdi culture, so to speak.
Yeah, that's right. And you know why? I mean, I think it's because uh, maybe 2024 is a given for them. You want to do a populist budget and take all those measures when you're not sure of your position. But hey, I mean, look at the way the political landscape is just now. I think there's still no credible opposition to BJP. The opposition parties have not yet completely got their act in order. Nothing has changed from last election to now. So there is no need for the government to go for any populist policies. And generally, I think the thinking also of the Modi government has to be long term, nation building, empowering the individual, providing more and more resources to the absolutely the needy, the people at the bottom of the ladder, and that's played out really well over here. So I think that that's perfectly fine. And just to touch upon something which we missed when we talk about the fiscal deficit, it just came to mind. I hope you don't mind. We're going a little back and forth.
Sure.
There's a very important element here is that the total borrowing of the government is within what the economists are expecting. I don't have the figure offhand. I think I sent it to you. Yeah. It's
Net
11.
11.8 lakh crores
Yeah.
market borrowing.
Yeah. So that's
Gross
very
borrowing
much.
14.
Yeah. But that is a very credible number. And what that means is that government borrowing will remain in control. And at a time when inflation is slightly on the higher side and interest rates are moving up as it is because of inflation, if you have the government borrowing in control, then there will be more resources available for lending to the private sector. And at this point of time, the private sector and retail lending really requires a great deal of resources and money to be lent over there. And I'll tell you why. Because two major sectors from the retail lending point of view, automobiles and real estate, they've started to do really well. Volumes are revving up phenomenally well in those two sectors. And in order to keep the momentum going, we need to grease it with low interest rates or reasonable interest rates and availability of capital, availability of credit. So if the interest rates are kept in check because of lower government borrowing, then these two engines of growth can do just fine. And these engines have got multiplier effect in the economy because a lot of other sectors are very deeply connected to these two large growth engines.
Plus, in particular, I think both automobiles and real estate and by extension construction are very employment intensive.
Exactly. You said it right.
So if they grow well, you have an expansion in employment. You have an expansion in employment. You have rise in incomes. You have rise in incomes. You have more distributive effect on income.
Absolutely.
Stronger growth.
And after many years, we are seeing an uptick in capex, private capex. So private capex also needs to be funded by debt. So if interest rates are low over there, then that much more the private sector is encouraged to on setting up new capacities.
Well, you say this, but I have a question then, right? We've talked about how borrowings are within expectations. We expect to see interest rates moderate. We expect to see an expansion in private credit. But maybe this is entirely unrelated, but PSU banks did really badly this session. I think the fall is like 5-6%, something like that. Why? Is there some fundamental reason? Have we missed discussing something?
I think the sentiment, and I will not mince words here, the sentiment in PSU banks has got impacted because of their exposure to the Adani group. And all the controversy surrounding the group. It's all over the news. And I think that was one of the reasons why the markets closed at these levels today, despite there being such a good budget. So that's having an effect on PSU banks per se. Right now, I think entire Adani group is. There are no, I would say, issues with their repayment capability. But the street behaves in a particular way. Sentiment, yeah, that's what's happening over here. But these things are short term, and this storm also will blow over. And we will start focusing on the larger picture, the fundamentals, and how fantastic this budget has been. So I think it's just a matter of time before people realize what a beautiful continuation this budget has been from all the policies that the government has been following.
That's great news. Final question, and I guess we're done for today. If you had to sum the budget up in 30 seconds or less to someone that knows nothing about finance, how do we tell them about what happened today?
So we can tell them that the nation's finances are in very good shape. To the layman, we can assure that you're going to have more money in your pocket, whichever way you want to spend or save it, and wherever you want to spend or whichever asset class you want to save it, you're going to have more options, more flexibility. You're going to be empowered. And the third point is that interest rates for you will remain stable. And these are important, because every household, every human being has a long-term plan in place. They want to achieve something, financial goals. What we have been working for, helping people achieve their financial goals. And financial goals can be achieved when there is a stability in the economy. There's stability in interest rate, there's stability in taxation. And that is what this government offers to you, a great deal of stability. We had this fear about tinkering with capital gains tax, but that didn't happen. Corporate taxes have been stable for years on end. GST rates have been stable. I think when things are calm, then the mind is at peace. Then you can really do great things in terms of furthering your own careers, and of course taking the nation building along with you.
All right. I mean, that was way more than 30 seconds, but that's okay. It was a nice budget, so we're going to let that go. And yeah, I think that's all we've got for today.
Thank you, Varun. I think great session we had, and I hope we get a good response. And of course, you're open to taking questions from the
Yeah,
viewers.
yeah. I think we'll try and get some questions for the next podcast onwards.